Welcome back to The Long View, occasional series on long-term investment decisions, coming to you this week from Edinburgh, which in many ways is a very appropriate place because it's the birthplace of Adam Smith behind me, the father of modern economics, arguably the father of capitalism. Many people who've been here this week for the annual conference of the CFA Institute have been wondering just what he would have made of the authorities' response to the crisis of 28. Now, one of the most vociferous critics is Jim Rogers, and we're going to show you an interview with him now. He was a very strong advocate of commodities, but in large part that's because he thinks that the response of the Federal Reserve has been to debase the currency. If you want something positive, however, he also thinks that although a crisis is inevitable in the US, that could ultimately be a good thing because it's creative destruction that allows capitalism to move forward. And perhaps we can all wonder what Adam Smith would have made of that. Jim Rogers, take us through why you are bullish for the long term on commodities.
It's very simple. There's been very little investment in productive capacity for going on 30 years now, at the same time when demand has been going up. But even if demand didn't go up, supply is going down or is under duress, that always leads to a bull market, always has.
Now, it's very difficult, obviously, to time these things, but last week we had a very dramatic break in the silver market, dropped by around a third. Does that suggest that there had been a bubble there? Does that have any implications for your overall thesis?
Well, you know, silver went up 25% in a month. Anything that goes up 25% in a month should correct, and I was very pleased to see it did correct. That particular correction, other than the fact you had this skyrocket move, was caused by the CME raising margin requirements 4 or 5 times in a pretty draconian fashion. And that, whenever that happens, it causes prices to go down for a while. It's not the end of the silver move as far as I still own silver. I didn't sell any, so I'm very happy to see it go down because now I'm buying more.
Now, precious metals attract a lot of
attention. Just to show you, see, I've got some silver
you.
right here. Never know when you need a little silver.
I have a little bit of gold I carry around with me. Now, precious metals are particularly interesting because there's this sense that they are a hedge against debasement of currencies, particularly the dollar. Is that your main reason for investing in precious metals, given that they don't have industrial uses, or why
silver
gold
does have
silver?
Industrial uses and is getting more and more. What you said is more or less correct for gold. Yeah. But yes, no, I certainly see that paper money is being debased all over the world. I think there may be better ways to play the debasement. I mean, rice or maybe some of the other things that probably go up more percentage-wise. But I'm not selling my gold. I'm not selling my silver because paper money, John, is being debased all over the world.
Now, how important is the monetary policy we've seen from the US in driving commodities at the moment, or are we really talking about resource constraints, about actual mouths needing to be fed that is driving this?
Well, the central bank in the US would say it had nothing to do with it.
Well, they'd say that. What would you say?
I know, but they've never been right. This guy, Bernanke, you should do an expose. You should go back and just... I've never seen anybody who was wrong everything he said for 8 years. It's astonishing. There are a few people like that. He's a great contrarian indicator. No, the printing of money does have an effect because there's all this money sloshing around. It's got to go somewhere. Some of the people, maybe they're nuts, but even if they're nuts and they think they should own gold or silver, they're going to own gold or silver. That's increased demand, and that's going to continue.
Okay, now that's perhaps somewhat alarming because it certainly looks, if you look at the charts, as though it's Ben Bernanke who has kept the US stock market afloat, who's reliquified it over the last 2.5 years. I mean, does that give you reason to be bearish on the US stock market or on the US economy in general?
Well, I'm mainly long commodities and currencies. I'm short emerging market stocks and American technology stocks. So I'm not, if the world economy gets better, I'm going to make money in my commodities. If it doesn't get better, I might make money in commodities because they're going to print more money. And fortunately, I mean, hopefully my shorts would go down in that kind of scenario, when the world economy gets bad.
But that's in large part a valuation play rather than anything else,
yes,
the way you chose those particular
the shorts are valuation. I don't see a bubble in those sectors. I usually prefer to short bubbles, but there are not many bubbles these days.
Now let's move on. That's at least encouraging, because the last time we spoke, which was in November of 2008, back in South Korea, we had just witnessed the bursting of very many bubbles indeed. around the world. And you said at that point, quite courageously, many people would have thought that you had still never sold a Chinese share. You, as I understand it, you continue to be positive about Chinese stocks. Take us through, given that there are a lot of concerns out there about China at the moment, why do you continue to be positive about China?
Well, if I had sold my American shares in 2000 or in 1908, I might have looked smart for a year or two or three,
right.
But over the next 80 years, I would have looked like a fool.
Yes.
And my plan is for my children to own my Chinese shares someday, my grandchildren, because I expect China to be the most important country in the 21st century. I hope that someday they're going to look back and say, that old man was really smart.
Right.
Or maybe they'll look back and say, what an idiot he was. But that's my view of Chinese shares. I don't have that view of any other investments. Everything else I have is for sale or to cover a short or something. But with China, they're for my children.
So that basically is the future of the world. If you get a big sell-off in Chinese stocks, you reload the gun? What do you...
If Chinese shares collapse, and there will be collapses in China, I promise you there will be. I don't know when or why. I hope I'm smart enough to buy more. Look, in the 20th century, America had many huge collapses in its stock market. Smart people kept buying.
Let me take you through some of the other bare points that people make about China. There's an obvious, blatant real estate bubble in many of the cities on the coast, which is not surprising because if you didn't like what Ben Bernanke did, something very similar happened to monetary policy in China. What are the risks that we get a Japanese-style burst property bubble in China?
Well, I think it's not a risk. I think it's a probability that urban coastal real estate in China will be coming down, and you'll see speculators or developers going bankrupt. China's doing its best to make them go bankrupt. They're raising interest rates, they're raising reserve requirements, putting on more and more restrictions. So it'll be good for China, it'll be good for the world if they cool that off and calm that down. But that's not like what happened in the U.S. and the U.K. In the U.S., you could buy 4 or 5 houses with no money down, no job, and then the banks went and turned it even more leverage, more gearing. You cannot buy even one house in China with no job and no money down.
Now, another point that worries people about China is what will happen to their monetary policy and what the effect of China tightening will be on the rest of the world. Now, will China or other emerging markets decide to allow their currencies to appreciate? Does that mean they stop buying treasury bonds, and what does that mean for treasury yields?
I wouldn't buy treasury bonds. I'm an American citizen. I want to
clear
sell
about
them
that
short.
2.5 years ago. Right.
I want to sell them short. That's a bubble. If you ask me, I would suspect you're going to see more and more people moving away from buying U.S. government treasury bonds. Not just nuts like me. You're going to see governments around the world because it's a serious problem. What's happening?
But the people who will burst that bubble aren't necessarily people in the Fed or in U.S. pension funds. We need to look at the behavior of global investors and of the big emerging market governments to see whether people lose confidence in
yes and no. Normally throughout history, when a country starts going, the currency or the bonds start going down, it's usually the internal players who sell first. I know the myth is it's always the evil foreigners.
But they're always the easiest to blame, aren't they?
And governments, that's what I said. It's the myth that it's the evil foreigners. But, it's usually, when the Greek bonds started going, it was the Greeks that were selling the bonds. It wasn't the foreigners. It was mainly the Greeks. It's usually the local people who do it. But eventually the foreigners will sell too, and the Chinese and the Japanese, and they're starting to already raise questions. They haven't started selling, but they've stopped buying so much, apparently. And that's going to get worse.
But how do you, can anybody, you're very positive about commodities in China, but by implication extremely negative about the States. Is there anything the States can do at this moment to avoid the kind of denouement we've been discussing, a loss of faith in the bond market and a very serious recession?
Well, I don't see anything that you can do in the short term or intermediate term. A crisis is going to come, and most governments that get themselves into this kind of situation don't really do too much until there's a crisis or a semi-crisis. When you're hit with a crisis, something happens. And I don't see until there's a crisis that America's going to do what it has to do. Now, it could cut spending draconianly. It could let a lot of things happen, but they're not going to do it.
Okay. Well, we at least still have some very positive takeaways, and at least we can always bear in mind that it's maybe it's the nature of crisis, of capitalism, of creative destruction, that the next crisis will at least have some good consequences.
No, there's no question that creative destruction is good for the world.
Okay, well, it's always a pleasure, Jim. Thank you very much.
My pleasure, John. Thank you very much for having me.